Good afternoon, everyone. Myself Parvatama, Assistant Professor, Department of Commerce, GFGC, Gauribidnu. Welcome for the session 37. In this session, we are going to discuss about the provisions according to the Accounting Standard 3 for preparation of cash flow statement. In the previous class, we discussed about the uses and limitation of cash flow statement. After the completion of this chapter, you are become familiarized with the cash flow statement as a tool for financial analysis. After this session, you are able to know the salient features of Accounting Standard 3 on cash flow statement. Introduction. Accounting Standard 3 revised during the year 1997 and it has recommended revised cash flow statement for listed companies and other industrial, commercial and business undertakings in the private or public sector. It is at present recommendatory in character. According to revised Accounting Standard 3, cash flow statement should be prepared in such a way as to report the cash flows during the period separately for operating, investing and financial activities. Meaning, Accounting Standard 3 deals with cash flow statement. This accounting standards for information about changes in cash and cash equivalents of an entity during a particular period. Such information is disclosed in the cash flow statement indicating cash flows from operating, investing and financing activities during an accounting period. Following are some of the important provisions of Accounting Standard 3 for preparation of cash flow statement. Applicability of Accounting Standard 3. This standard applies to the enterprise having turnover more than 50 crores rupees in a financial year. Listed companies. Cash flow statement of listed companies shall be presented only under the indirect method as prescribed in Accounting Standard 3. Features of cash flow statement according to Accounting Standard 3. The cash flow statement should report cash flows during the period classified by operating, investing and financing activities. Some of these three types of cash flows reflect net increase or decrease of cash and cash equivalents. Foreign currency transaction. The effect of changes in foreign exchange rate should be reported as separate part of the reconciliation of cash and cash equivalents. Unrealized gain and losses arising from changes in foreign exchange rate are not cash flows. Extraordinary items. The cash flows associated with extraordinary items should be classified as arising from operating, investing or financing activities as appropriate and separately disclosed. Treatment of tax. Cash flow for tax payment or refund should be classified as the cash flow from operating activities. If cash flow can be specifically identified as such cash flow from investment or financing activities, appropriate classification should be made. Dividend. According to the provision of Accounting Standard 3, dividend received in financial enterprise is operating activities other than financial enterprises is investing activities. Dividend Dividend paid always classified as financing activities. Cash flow from dividend should be separately disclosed. Non-cash transaction. These should be excluded from the cash flow statement. These transactions should be disclosed in the financial statement. Example, acquisition of an enterprise by means of issue of equity shares, conversion of debt to equity, etc. Investment in subsidiaries, associates and joint ventures. Only the cash flow between itself and the investee is required to be reported. Example, cash flow relating to dividend and advances. Acquisitions and disposal of subsidiaries and other business units. Cash flow on acquisition and disposal of subsidiaries and other business units should be presently separately classified as investing activities. Total purchase and disposal should be disclosed separately. The position of the purchase or disposal consideration discharged by means of cash or cash equivalents should be disclosed. Features of cash flow statement. The cash flow statement should report cash flows during the period classified operating, investing, and financing activities. Some of these three types of cash flow reflect the net increase or decrease in cash and cash equivalents. Thank you very much for one and all.